Alrighty, good morning, good afternoon, good evening, traders, and welcome to another Triple A. We call it Ask an Analyst session here with my team. Tyson and Chris is joining me today. We're going to be talking about a couple of things that you need to know about. All right, we're going to talk about US oil. I know that there's been a lot of movement in US oil, specifically on Monday, as you saw US oil trade below zero. We're also going to talk about the dollar index because that covers most of the dollar crosses, and so we'll be able to tell more or less what we're going to be doing on the dollar index. Now, the dollar index could reflect currency pairs like Euro US dollar, Pound US dollar, US dollar JPY, US dollar Swiss franc. Now, a lot of those pairs, in my opinion, I said stand aside. It's not doing much. I'm going to just stand aside on those currency pairs. We will look at those currency pairs briefly and just take a quick look on that. But I know Tyson's also got a lot to talk about regarding ETFs and something that you need to know about. So stick around, traders. We've got a lot to talk about. Let me introduce to you the panel. Firstly, of course, we have our top dogs here. We got Chris. How you doing?
I'm doing well, Gary. Thanks for having me, and nice to see everybody.
Fantastic. And Tyson, good afternoon to you, my friend.
Yeah, it's good to be here. Crazy market movements, but traders love this kind of movement, so it's going to be a good session.
Well, volatility is what we need, right, in order to be able to make money, and so volatility is certainly here. Now, we have seen it slow down a little bit this week. We haven't seen a lot of volatility this week. I've been doing myself a little bit of scalping throughout the week just to go ahead and pick up some additional profits, and we've been making good money. But let's talk about the first thing on the agenda right now is ETFs. Tyson, I know you want to talk about it because there's certain things that traders need to know about.
Yeah, I do. I think this is kind of my PSA for the day, and I think this is really important for traders to understand. There was a question on our Facebook page, MTI Family of Traders, on hey, how do we play this oil move? Because oil's gonna find a range. Oil's price is not zero, right?
Yes.
There's a demand for oil. There's going to be a demand for oil for probably my entire lifetime. I have been a perma bear. I have said that I said this years ago that I think oil's going to see prices below 10.
Sure.
I didn't think it was going to be like it was on Monday and on Tuesday, but so that happened. But here's the deal. Again, there's going to be a demand for it. There's still a value there. But what happened was we have a lot of instruments, a lot of derivatives, a lot of ETFs that are priced using futures contracts. And what it does is it causes imbalances and indiscrepancies within the market. And I'm going to use the USO as an example. USO is one of the better oil ETFs, but it's still not great. The best oil or energy ETF to invest in, the safest, the one that's not going to have some shock or some negative effect to it, is going to be the XLE, which is the energy sector that trades within the energy stocks, right? But the USO, as an example, the way that it creates itself is it uses the derivatives in the futures market. And so it has a mandate within its prospectus, and I don't want to get real wonky on you, but it has a mandate to go out and buy the front month futures contracts, and then it rolls every day. It has a certain percentage where it rolls into the next month, Right. The issue with that is the market is typically in what's called contango, the futures market. Contango is when we price tomorrow or next month's risk price or assumed price lower than we price next year's price. So the slope curves down because I'll use volatility as an example. We have a tendency to think we think we know what the risks are tomorrow better than what we know the risks are next year. And so we'll overprice next year's risk and we'll underprice tomorrow's risk. And so the same thing happens in the oil market where they'll buy next month's futures contracts, but next year's future contracts will be trading at a higher price most of the time, like 90% of the time. So what happens is those future contracts have a tendency to every single day lose value, because they're eventually, if spot price, I'll give you an example. If spot price is sitting at $10, next month's futures contract is sitting at $12, the month after sitting at 15, well, if spot does nothing, even if spot goes up $1, this futures contract's eventually going to have to come to parity. It's eventually going to be priced at spot. So what happens is oil can rally up in spot prices and those future contracts can still continue to lose value. So a lot of these ETFs that are derived by derivatives or invest in derivatives, what they're doing is they're investing in negative interest, negative rolling positions. They're investing in positions that are decaying almost on a daily basis, especially in a normal market environment where the market stays in what's called contango. Now, it works well when the market goes into backwardation. So if volatility spikes up, their oil goes on this major rally, then the market kind of flips, that curve flips, and it works really, really well. That's why you see these ETFs such as the TVIX go from 50 or 100 to 800, 900, 1,000, because we went from contango to backwardation. However, there are people who have literally made millions of dollars, made a living by doing perma shorts on TVIX, on USO, on different leveraged ETFs. And so I just want people to understand, when you're investing in something like that, you want to invest for a short-term pop in the price, and you want to get out, because every day that goes by, what you can see is rallies in the underlying. You can see a rally in oil, and something like the USO still lose money because it's investing in something that over time is decaying in value. Now, there's a lot more to that, but I just wanted to mention that real fast because I don't want any traders to get hurt. So if I was to invest in anything in the energy market, it would be the XLE, or better yet, I responded to that post on the Facebook page, and I said I think the best investment is in Delta Airlines. The reason why is because if oil rallies higher, then that's going to be a good sign for the economy starting to turn around, starting to get its legs back under it, and that'll be good for all stocks, and airline stocks will rally. However, if oil stays low, then that's long term. When we do open up, that's really good for the airlines because it decreases their operational costs. So Delta Airlines right now is a very strong financial company, a company that's in a very strong financial position, and I like it a lot. I like the company a lot. So that's the way that I would play this oil big downturn.
Okay, and so currencies and Chris, currencies haven't really been affected as much as we saw the big move when we saw that gap in the market a couple of months ago when oil suddenly dropped from trading at $42 a barrel down to 32. It gapped about, well, actually 35, and then continued to move down all the way down to $20 a barrel. We saw a big move in the Canadian crosses, right? But just recently, we didn't see this. What is your take on that?
Well, I mean, you have to remember that also when that happened in March, that was over a weekend. We had a weekend gap. And the reality is that was also with the headlines and uncertainty of coronavirus. And then you tack on an oil crisis on top of that. So you had gaps on CAD pairs, gaps on yen pairs, gaps on Aussie pairs. The currency market just reacted to, we're like immediately going into a risk-off environment. So what we have witnessed in April is essentially, the bottom was put in place on, March 20th through the 23rd. I'm trying to think where that bottom is in most of the stock market, somewhere in March 20th or so. April has been mostly a recovery month. In fact, in my trading room, we've been talking about what to look for over the next, probably we have 8 days left to trade in April. There's that old saying, sell may go away. And I'm watching for those stock market levels to confirm that we are going back into bearishness. I'm watching that volatility index, that VIX, to get above 50. If we see the VIX above 50, if we see the stock market, which has about 8 or 9 days of indecision, if we break those levels, I'd say bearish. If we break those levels bearish to start showing more signs of bearish sentiment and resuming what we saw back in March, then we're going to see currency pairs affected by this. So it was weird. I mean, you and I talked about it on Monday when we're watching oil prices, and I had to get the scoop on it because everyone's like, it's zero. It's the Bloomberg terminal says it's negative. Well, it was May contracts. So essentially just dumping positions in May contracts so nobody's left holding oil. But it's Tyson's talking about USO and UCO and some of those ETFs. I mean, look, I took a small position, and I'm contemplating whether or not I want to hang on to those. We saw somewhere like 400% net holdings were increased over this week with USO as investors are trying to jump on board and try to get some type of pop in these oil ETFs. However, as Tyson said, they can lose value, they can decay. So you might see oil recover to $15, $20, $25. But I don't know if we're going to really see oil pop higher than like $30 to $35, maybe $40. But I think at the very best, we see oil range bound between, now we have lows around $10. If we get up to $30, $40, that's about the new range. So again, as Tyson said, just be careful on these ETFs and certainly don't look at it like a like a get rich quick. I mean, if you're going to hold it for any duration of time, you could be losing value on that. So just watch where your break even levels are, have your positions in mind, and that's all about position size and equity management and time. As far as currency pairs, I was shocked. I mean, look, if what I'm saying comes together, like the VIX increases to 50 plus, the stock market starts to drop and start showing more bearish confirmation, then I am wanting to get back on yen pairs. I am wanting to see the yens, obey like they did back in March, where they were permanently strong for 2-3 weeks running. We had some aggressive trends, hundreds and hundreds of pips up for grabs in every yen pair. I had some deployments. I talked about deployments yesterday in my trading room, and I'm trying to keep it really clean because, like, for some reason, oil, the stock market, the currency market just didn't correlate. Like, oil had its crazy price action. That was the big headline news. It went into massive what was it? It was massive contango, right? When we just boosted down to zero. And that's probably not going to change. Like, June contracts might do the exact same thing. Like, if it gets end of May, it's like we could see the same thing happen again in June. So this could be a recurring theme for the next couple of months until oil finally finds its footing. And the certainty of getting back to work is able to be priced in, or we have supply cuts to further help bolster prices. So
check
I'm
out
waiting for confirmation. I want to see confirmation. I'm trying to keep it simple, Gary and Tyson, like a daily chart, clean levels. Try to trade open spaces. I want to see if volatility increases, because when volatility increases, that VIX is also the fear gauge. That fear gauge means risk off, which means for trades like the Japanese yen, the JPY should be a lot stronger. So that's what I'm looking for.
Right. And I'm looking at the chart. I pulled up the chart right here, the dollar index chart here, daily time frame, and we noticed that price was trading inside this range or this wedge. In fact, let me pull it over to a weekly right here. You can see more data from the weekly. So we're trading in this this downward wedge, or this falling wedge, and price came back here. And to be honest with you, I didn't expect price to break out of this bottom right here. But I did notice that we had a wave structure right here, which is very interesting. If you take a look at the wave structure, we had wave 1, 2, and then 3 was down here. We had a very shallow retracement on 4, and then it broke down to where we anticipate wave 5 to be. I didn't think we are going to get there. Obviously, we traded a lot lower than that, but $8 a barrel was the number right there, and price got there. And now it's pulling back, and we've got this big pullback here this week. It's pulling back a little bit. So coming back to where you spoke about the recovery levels, if it's anything like we should see in any sort of wave structure, then price is going to go ahead and try and take out the previous wave 4, which is this level right here, and that's traded at around about $29 a barrel. So I certainly see that being a target, and then further, at least a minimum target, and then maybe going ahead and testing the gap open, which is at $35 a barrel. So maybe we're going to get to about 30, maybe 35 in that range, and see a turning point at that point.
So Gary, I agree with you. I think if you remember what I said last week when I talked about oil, I said the supply and demand concepts is going to control the market, and that's exactly what is controlling the market right now. And so I think there is a way in the futures market. If you're a futures trader, there is a pretty nice way to trade this. Think about when the market's going to open up, and you could potentially say, hey, you know what? I think we're probably going to get opened up and do decent by July, let's say. So you can go out and buy the July contract and sell the June contract and do what's called a calendar spread, futures calendar spread, and look for that spread to widen out, where the June contract continues to get beat up. July contract maintains its value decently, and you make the difference in the spread. It's a little bit more complex, but there's ways to trade that calendar spread also within the futures contract. And that limits your risk rather than just going into one contract or buying a contract or selling a contract or doing some type of stock position. It does limit your risk, because if one loses money, you're making money on the other.
Sure. Now, I think looking at the US oil, I think if US oil sticks around at these low levels and we don't see any sort of climb above 35, I don't think we're going to see any sort of major changes to the currency pairs, because we are seeing at the moment right now strong dollar. We have seen some temporary strength now in the last 24 hours on a Canadian, but we're going to definitely see some strong dollar continue. New Zealand has actually weakened up the last 24 hours, and then we've definitely seen some weakness out of the euro as well. So when we look at US oil, anything traded like the Canadian, let's say Euro CAD, Euro CAD should be a sell-off because, and in fact, I've got a setup that I think is really hot on the Euro CAD. And hopefully, if we've got some time, I can go ahead and talk a little bit about that. But Euro CAD definitely looks like a sell-off because we're getting weak Euro and stronger Canadian. And actually, if you look at the technicals say, yes, we have divergence, prices hit resistance. We should see a sell-off on Euro Canadian dollar. And the same thing goes with Aussie CAD. If you look at Aussie CAD, I'm going to pull up a chart right here and look at the daily time frame. Take a look at the resistance that we're hitting over here at the top. It's hitting that resistance is strong. It cannot break through that. And so if we get some stronger dollar, maybe we're going to start to see some recovery in the Aussie CAD. Maybe a little bit of weakness left in the Aussie to just pull it back on a retracement move, and then go ahead and start thinking about buying back up again. But we definitely
it's
see some
actually interesting. It's interesting you say that because I just started to get into a position short the Aussie CAD yesterday, and I'm looking at the pound CAD. I actually like the looks of the dollar CAD. And so, this kind of goes full circle back to currencies. What's the best way to play this? I think it's looking for a little bit of a relief rally in the Canadian pairs. And I think there's a lot of good opportunity right now. Keep your stops, within good limits. But I think we've gone, I use this word a lot. I think we've gone too far, too fast in oil. I think the Canadian dollar's held up decently, relatively speaking, and I think that bolsters for a really good sign if oil does create a floor or maybe rally up a little bit. I could see the Canadian dollar strengthening nicely against the euro, against the Aussie, against even the pound and the dollar.
Yeah, absolutely. Let's go ahead and flip it over to so let's just sum that up quickly before we move on to the dollar index. So US oil, I think we're all in agreement that we're going to see US oil possibly go ahead and trend up a little bit higher, maybe get up to it's about $30 a barrel, maybe $35 a barrel. But if it stays at this level for a little bit longer, it's not going to affect the currency pair direction, although we are starting to see the signs, right, that Aussie's hitting resistance, pound's hitting resistance, all trade against the Canadian. And then, of course, the euro hitting resistance as well, also trade against the Canadian. We're seeing resistance there, which indicating that there's a possible siding of some stronger Canadian, which means oil price could start slipping up a little higher.
Yes.
Okay. All right, good. Well, let's move on to the dollar index. Dollar index is a really interesting setup on the chart. And if I want to go ahead and take a look at this, right, and of course, dollar index affects a lot of the crosses, right? So this is my 2 cents on the dollar, and you guys can go ahead and share your views on this. I'm looking at the dollar index, and there's a couple of things right here that tells me that dollar is going to get a little bit stronger. All right. Before I go ahead into the technicals, do you agree, Chris, and do you agree, Tyson, that we could see some strengthening dollar, or do we still see weakness on this?
I think that I don't think the dollar is going to take out the March 20 high. I think that we have a little bit of near-term strength that gets us back into looks like the high from around April 3rd. I'm looking at the US dollar index. So we had a high established the early part of April. If we get back to that level, I think that's some near-term strength in the dollar. But at that point, I still Tyson and I talked about that cup and handle pattern. I talked about that reversal pattern from that high on March 20th. I'm still using kind of that structure overall as shorter term, probably the next 1 to 3 months, I would expect more dollar weakness. Maybe in the next 1 to 2 weeks, probably dollar strength. But I still think that going into summer months, if we're going to have a Fed rate decision at the end of the month, this is, I think, April 29th, whatever that Wednesday, I think that's Wednesday the 29th, another Fed rate decision, which will likely be the same. They'll keep the rates at 0%, 0.25%, and just reiterate, the need to evaluate the environment and evaluate the economy with everything coming out of the coronavirus and how we're getting back to normal come May 1. But yeah, I think that I don't think we're taking out those highs from March on the dollar index. So I like the next couple of weeks dollar strength. I like the next 1 to 3 months probably dollar weakness to take us into summer.
I agree. If you look at right where you have that second purple dotted line, that there's a nice supply level sitting there. So I think it just coincides exactly with what Chris just said, and even what you just said, Gary. Dollar strength into that level, testing those March highs, those late March highs. I don't think we're going to take that out, and I think that's going to be a nice place to start structuring some shorts in the dollar CAD, dollar yen, and maybe even a good opportunity after a little bit of a push down in something like the pound dollar long.
All right. Well, this is what I'm seeing on the chart right here, and let's stick to the technicals right now. So I looked at this and I used patterns, right, and I pulled up a pattern right here from the low down here, bringing it up to the high, and just really trying to see where the turning point is going to be down here. And so I pulled this up right this and check what I found. I found a beautiful little Gartley, Max Gartley setting up right here, indicating price is going to push up. Now the target on the Max Gartley is all the way up here at the one. Look at that. It's the 1618 retracement of the CDD move right here. There it is there at the backside, or at least where our projected trend line is going to be. I took that trend line from the lows and I just extended it to the upside to see where price can move to. But this is the thing that I'm seeing here very, very clearly. Right? So we've got a nice support level identified by a Max Gartley indicating that price is going to move up. But this is what I'm seeing right here that's real interesting. Okay? If I go ahead and actually take a pattern and draw a pattern from the top right here down to that low, this B high, and then the C low down here where we found the Gartley, and then go ahead and pull it back up, traded above the B, take a look what we got here. We've got a X butterfly pattern. And so what I'm looking for right here is I'm looking for a reason why we would see dollar rallying up. And so if I go back down here to the oscillator down here, check out the oscillator. The oscillator right here is telling me that we have a possible pattern that could create a anytime price goes ahead and moves higher, we can see a possible divergence with momentum. And so what I'm looking for right here is I'm looking for price. I'm going to go ahead and draw it in here. I'm looking for price to trade up above this high. The reason why this high is important for us is because I want to see that price is continuing to move lower. Sorry, momentum is continuing to move lower right here. And so what we do is we have this high peak here that's matched up with this. So if price trades up above that level, then I'm looking, and of course then we have the momentum pushing further south. We have a very key level of sell-off right here. That's if we take out the March highs that Chris says that he doesn't see it happening. But if it does happen, this could create a huge opportunity for sellers right there. Now, let's look at the short term. In the short term right now, if price takes out,
let me grab. What's interesting about the butterfly pattern you just drew is that butterfly pattern creates. I always talk about supply and demand at that secondary supply and demand, right? That supply level right above. So right where that butterfly would create, there's a really nice supply level. So if we break above that late March high, then absolutely, I think there's a fairly clean shot to that 12,800, 790 level, which would create that butterfly.
Yep. So you're saying, all right. So this is the April. It's April 2nd. So April.
Yeah. So if we break
April.
above that, so I would be really reluctant trying to break above that. I'd take profits there. If I'm buying the dollar right now, I'd take profits there. But if we do break above that level, then we're going to go to that next supply level, which would create that butterfly.
Okay. Now there wouldn't be a divergence if we don't take out the March high right here. There wouldn't be divergence, but there certainly would be this pattern right here that's confirming that price is going to. So what I'll probably go ahead and look for, and if I move this down to a 4-hour time frame right here, check out the 4-hour, and I move it to the 4-hour. I look at the 4-hour a lot when I look at in fact, I'm scalping on a 1-minute time frame on using my Right Trader Max system, and anyone that's going to use a automated system with its turning points or whatever the case may be. I definitely see the lower time frames offering better opportunities because we're getting early on those trades. But looking over here, I would be looking at as soon as price gets up to the top right here. So which means is as soon as we start taking out that high, I'm going to be opening up business for a possible divergence on a 4-hour time frame. So as soon as I get the oscillator confirming that we are starting to see a downside move, and we see price taking out the highs, and we get that the top forming at the top there, then for me it's going to be a big possibility to start thinking about getting in on those the US dollar crosses, which is Euro US dollar. We've got pound US dollar. All of these that I've actually stood aside on. Euro US dollar, pound US dollar, US dollar JPY. All three of those I've actually said to the traders, stand aside. It's just horrible. The way it's set up right here, it's horrible. I'm going to quickly flip over to that. Like, for instance, take a look at US dollar JPY. This is the daily time frame. I mean, who wants to trade that? Who wants to trade that? That's horrible.
Dollar yen is awful. The only level I'm even remotely interested in is if we get a daily candle below 107, and I'll short it down to 105. I think there's momentum behind that if we get it, but this pair has just gone to sleep and forgot to even open. I mean, it's so bad right now.
Yeah, and take a look at the US dollar. This is Euro US dollar right here.
Yep,
Same sort of look that we've seen on the US dollar JPY. Same sort of look. It's just horrible right now. We've had a whipsaw action both sides, which is expansion phase. Now we're looking for the market to trend. We're not there in the trending stage yet. And the same thing goes with the pound US dollar. I'm going to flip over to the pound US dollar daily as well. Look at this. Now, I must admit, I find the pound US dollar a little more interesting than I do on those other two, just because we're seeing a rising wedge right here, and prices coming back to support for a possible buy long. And I see if dollar index does start falling short, and we start seeing a selling off, this is going to be a great opportunity for traders to go ahead and think about buying at price at around about 119.77. Let's call it the 1.2 mark, right?
Yep.
The 1.2 mark right here. I think it's going to be a good place to start thinking about buyers.
That's perfect that you just mentioned that, because we actually started deploying Right Trader Max short today at current price, looking to confirm they have the 1 hour alignment, that's a sell zone, 30-minute alignment to sell zone, 15-minute chart, we're getting some entries, and I like 120. I in fact, my robot is set up to take profit and close everything at 1.2025, just to make sure we hit that round number at 1.20, and then from there I'm with you. I'll definitely be a buyer. But I think we stay in the near term. We're going to hopefully slide a little bit lower on that pound dollar.
Yep, 100% agree.
Look at the 4 hour right here, Chris, just to confirm your sell-off, right?
Mm-hmm.
Yeah, we have price moving higher. You can see right here. We've created price up here, so it's a little wider, but we have price confirming a high up here at the top, moves higher. Divergence is in play right now. And we just broke out of that wedge to the downside right here. Here's a sell-off right here.
Mm-hmm.
So it's definitely confirmed that we have a breakout and price is moving down to support at 1977.
Yep, and there's some really nice, I'm sure, Tyson, you've got some supply and demand levels down there around 120. I've got a great pocket on that 4 hour chart right there.
Yeah,
yep,
right where
exactly, right at 120.
I'm on the exact same page. I've got some shorts set up. I like the pound dollar. I like the pound CAD better than I like the pound dollar, because I am looking for some strength in the dollar, but I think the CAD is going to be one of the strongest of all. And if the CAD gains a little bit of strength against the dollar, even if the dollar is strong against the basket, then the pound CAD is going to give us the best bang for the buck. So I've been actually looking at the pound CAD, and I've started to establish some positions in that also. But again, it's not going to be a long-term trade. I think we're going to come down to some really nice levels that we can start to buy at, but just kind of shorter term over the course of the next few days or week or so. Pound CAD is just like the Euro CAD is some of my favorite trades.
I like it.
I think I'm right on that, dude. I am right with you right there, Tyson, on that, because we were in a downward swing. We've got nice consolidation right here. If we do see a pop up to the upside, it may be very short lived, and it's definitely long term. I believe we're chasing after. Let's call it midterm, because long term sounds too long. You know, I may not even live that long when you talk about long term. I'm at that age where you start counting the years. So we're at 1.224. So 124. What is it? 124. Let's call it 125 because we're friends. So 125 right there is a level of support that we're expecting price to move to if we break through this range. So we've definitely got a lot of.
So you're talking crater down potential.
Pound CAD.
Listen, I'm not going to say it can't happen, because I mean we've had moves over the last 2.5-3 years. We've had crazy markets of low volatility followed by here we go. We're going to go to levels you didn't think we could go to.
Yeah.
So, absolutely.
I mean, it could happen for sure.
Absolutely. Well, there's 2,000. Look here. There's 2,000 pips in this range, right? So there's a lot of profit in the range alone.
Definitely.
Forget about the breakdown to 125. If we can just trade the range, there's a lot of profit right there. If we can pick the tops and bottoms of that range and trade it to in that direction, there's definitely a lot of profit in these positions right here.
Yeah, like it.
All right. So, all right. So just go ahead and guys, we're going to go ahead and quick do a sum up on this. I really appreciate you guys here, but let's go ahead and do a quick sum up. So talking about US oil. US oil, we're on the same page, expecting a possible upside move on US oil. probably around about $30 a barrel to $35 a barrel, maybe still around there. If we see levels stay where it is at the moment right now, because we have to be real about supply and demand, right? There's a lot of supply, no demand right now because of quarantine, because of the coronavirus. But as things start progressing, as the US starts opening borders, things start happening, more traveling starts coming into play, we may start seeing a little bit of a higher uptick with US oil. Are we on the same page on that?
Yes.
Yes.
Okay, good. Dollar index. Dollar index, expecting possible upside move in dollar index. A little bit of an upside move, but once we get to a level of resistance where we're anticipating pricing move, Tyson mentioned 12,800. So if we get to those levels, we could possibly start thinking about bearish on dollar, which means that we can start paying more attention to those whoopee-lashy type of setups that we've seen on the euro US dollar. Pound not so bad. Pound US dollar not so bad, but definitely a euro US dollar JPY definitely on the sideline on that. But we agree that we're probably going to see over the next few weeks dollar strength a little bit. But then when we get to those levels, great opportunity for those sellers to go ahead and get into the market and sell off dollar.
Yeah, and real fast on that, I think what would be brilliant is if we got that dollar move up to that 12,800 level or so quick, and then we look at dollar CAD sell-off.
Absolutely. I like that.
Okay.
And that dollar CAD too, that could correlate nicely with 4,300. I was looking at that price today. We actually set some pending orders right at those highs, those range highs on dollar CAD.
Yep.
Dollar CAD?
Mm-hmm.
Okay, cool. Fantastic, guys. Well, I appreciate it, guys. Thanks so once again. It's been an absolute pleasure having you guys here and just hearing your thoughts about the market. It's great. Trading doesn't have to be isolated type of business. But traders sometimes need to have conversation with other traders just to get a good feel of what they're feeling about the markets, because sometimes you get a little frustrated when you're not seeing the things that you should be seeing. And just having conversations with traders like we are having right now just brings in a little bit more information into the picture that can help us make better trading decisions, right? So I do appreciate Chris and Tyson for you guys being here. Hopefully you guys have learned a little bit from what we're doing right here. We are running some trial periods with regards to, well, not trial periods, some test runs with regards to the live broadcast. We should be back next week with some live broadcasts. So we want to make sure that all the kinks are being cleared out and that we are ready to go. So with that being said, guys, we'll probably see you next week. Have a fantastic weekend. And from my team and myself, be safe and trade with good equity management at all times. This is FX Big Dog and my team saying cheerio.